represent customer to the manufacturer. Will not represent manufacturer to the customer. Now that can only and only happen if customer pays us. If he doesn't pay us, if manufacturer pays us, we'll have to represent the manufacturer. And there's nothing wrong in saying that. If my घर की दाल रोटी जो चल रही है वो मेरी म्यूचुअल फंड की कमीशन के हिसाब से चलेगी तो मेरी लॉयल्टी पहले इस तरफ रहेगी. It will not, it cannot be. Very difficult to distinguish about it. Okay, I'll do one more small survey. How many of us invest in life insurance? Okay, one more question. How many of us invest in life insurance? Come on guys, you know the answers. Many of us sell endowment and all that. Come on. Invest in life insurance, get our clients to invest. Nothing wrong in that. You know, investing in life insurance is wrong English. You have to buy life insurance. We end up investing because that's how this industry is structured. And there's nothing wrong in investing. If you want to see insurance as an asset class on the fixed income side, there's nothing wrong. But not at the cost of low insurance. You should take adequate cover and then give the investment product, which continues to happen. This is still not changing. Representing customer to the manufacturer is a mindset issue which is still not changing at a major level. But we have some of our experience, it can happen, and I can bet Lova's experience is similar. And he's going to share the same thing, that today when we go and charge customer and he pays us, our ability to go and represent him to manufacturer increases. So this is what we do at Ffreedom. Now what do we do for which we charge him? We charge him for writing a financial plan. Okay? Financial plan is as per my definition, it's a personal family balance sheet. Each business has a balance sheet. Every family needs to have one balance sheet because there is an income, expense, assets, etc. Everybody needs it, and trust me, it's a virgin market. I'll say only 0.001% Indians still now have a financial plan. 99.999% Indians don't have financial plan, and you can charge for it and they pay for it. The reason is we need to understand. So I'm going to basically try and take you through in a quick succession what does financial plan mean, because my conviction is many of us sitting in this room do not have our own financial plan, even though we'll tell a lie, but we'll not have it. So let's go through this. The first part is emergency planning, right? Which means in case of any kind of an emergency which my family sees, I've planned for it. How many of us in this room have an emergency plan? Trust me. So the definition of emergency plan is, if something happens to my business or income for next 6 to 8 months, I don't need to worry because I have planned for it. You agree? No? Okay. 12 months, 3 months, whatever. But emergency plan needs to be there. And if you have emergency plan, then why is the worry to change? Because you're not going to fail. Because you have already provided for it. So my sense why change is not happening in this industry is because we are fearful that when that change happens, it will impact our cash flow, and we are not prepared because I don't have my own emergency plan. It's all psychological. We don't have it. Everybody needs it. I'll give you an example of my father. He's a product of India-Pakistan partition. Moved from Pakistan, settled in India. So one day I asked him, what is your emergency plan? He said, buy gold, keep it at home. That's his emergency plan. Why? Because from Pakistan, the families which ran, those who had gold, they flourished in India. Those who didn't have gold, didn't flourish, they had to struggle. And my father's family didn't have gold. So they went through the tented accommodation, whole family living in a small home, and they struggled and came up to a certain reason. So the next question, do you see partition happening again? He says, I don't see partition happening again, but we live in Mumbai, we live in Lokhandwala, very near to sea. So he gives me a scenario. He says, imagine if tomorrow there is an earthquake in Arabian Sea, and there is an earthquake. As a result of which there can be a tsunami. And if there is a tsunami, do you think banks will be open, you will be able to go to locker to take your stuff and run? Even at that point of time, gold at home is going to make sense. So the point I'm trying to make is, there is no logic on emergency planning. Whatever makes sense to you psychologically is emergency planning, and each one of us needs to do it. It couldn't be buying gold and keeping it home, it can be buying solitaires and keeping it home, it can be keeping cash at home in a safe, fair enough. But that needs to be defined and done in this way. The next part is risk. So there are different kind of risks. First is loss of income, which is death. To me, insurance penetration is a bullshit figure in India. When we say insurance is penetrated, why it's bullshit? I still think 99.9% Indians are inadequately insured. They do not have sufficient insurance covers. So let's do a small survey in this room. How many of us have insurance of more than 10 lakh rupees? Alright, that's close to 95%. Okay. How many of us have insurance 25 lakhs? 75. How many of us have insurance? 50 lakhs. 60. Okay, how many of us have insurance worth 1 crore? Close to 20-30%. Okay, now let's do a small mathematics. If somebody is no more, insurance money which you get is supposed to be kept in a bank or as a very safe investment, and whatever return or interest you get, you need to live your life like out of that, right? You're not ideally supposed to spend that insurance. Ideally, you might do that. You know, anything less than a crore at 6% long-term fixed deposit rate is going to generate less than 50,000 rupees a month to live your life for a 20-year period. So almost India is reaching a stage with our current inflation. Any insurance less than 1 crore doesn't mean it's an adequate insurance. And I'm just using it as a thumb rule without getting into the actual calculation you might have assets. The point I'm trying to make is it's a bigger epidemic, inadequacy of insurance. And why there is an inadequacy of insurance? All of us invest in insurance. As a result, we pay high premiums, get low insurance. Okay, how many of us have our own houses, our own properties? Yep. How many of us insured that? Alright. Again, 30 to 40%. So our biggest investment is our own houses. We don't have asset insurances. I'm not saying it's a great product. I'm just trying to make you a point. Alright. Yep. True. Actual survey will be much lesser than that. Similarly, critical illnesses. We take Mediclaim, but our critical illnesses are inadequate. So tomorrow somebody suffered from cancer in our own industry, it will be a problem. I think Birla is a great initiative where they came up and did for financial advisors that we'll give you a PPF or Provident Fund and other kind of insurances. So such kind of initiatives are required, but risk, goals. Now, to me, difference between dreams and goals is quantified dreams and goals. Our experience at Ffreedom is average. In an average plan, there are 6 to 7 goals whose durations are 8 to 9 years. So whatever assets we are realizing and giving to manufacturers, their minimum duration is 5 to 6 years plus. And we don't believe in churn. But let's say look from the client point of view. Our whole pitch to him will help you live your financial goals. And we're not saying we'll help you achieve financial goals because that's not in our hand. And 6 to 7 goals. And each goal means opportunity to monetize it. Each goal means opportunity to monetize. I'll come back to it. Then you have retirement planning. I think the biggest risk India has today is risk of longevity. We will outlive our savings because of medical science is improving so much. Earlier we were dying at the age of 70, now we might die at the age of 90. And imagine your client. And for manufacturers, there is hardly any annuity products available today. We do not have any kind of a pension where I can go and buy annuity. I can save Bagaria Sahab in a PPF or EPF, but there is no annuity. I can't buy any annuity. Imagine how big an opportunity is there. Last but not least, succession planning. How many of us in this room have our own will? Come on guys, be truthful to me. 2 hands. Our own written will. Will, written will. Do you have a will? You're not going to die anytime. Why there is no will then? See, okay, at Ffreedom, we charge 5,000 rupees for writing a will. Last month, we did 28 wills. 28 wills. And these are all mass affluent, normal guys. Slowly we are realizing a monthly cash flow could be as high as 5 lakh rupees. Just by writing wills. And people don't even ask you twice about paying 5,000 rupees. Nothing, writing a will. A normal rate could range from 2,500 and go to 15, 20,000 depending on lawyer, how does it. Even nomination. Most of Indians nominate husband and wife. Is this the right way of nomination? It should not be. You should have a joint account with your wife.
Can it be changed?
What?
Can it be changed?
Yeah.
Will can be changed. In fact, will can be changed anytime. You don't even require a lawyer. You can write your own will. You can piece of paper. Even I think it's a video will, right, Loy? Now even a video will is become. It's only that somebody needs to go and explain in the concept. And Ashish said, when you go to your client, what do you talk? Imagine. Today you go to him and say, sir, I was just wondering, do you have a written will? This is the reason you need to do that. Your half an hour discussion will be on the will. By the way, there is this new fund which will fit into your overall goal of education for your children. Completely different way of looking at it. And he will love you for this because that's a value add. So nomination is another thing which we see. Family trust. There are complications in families. Family trust creation is not tough. You can do that. Again, you don't need to be a legal expert to do it. So now, the beauty about this concept is, I'll introduce you the concept of average revenue per plan. So from mobile industry, if you look at cellular industry, mobile, a company like Airtel, etc., get valued on a concept known as ARPU, average revenue per user, right? If your ARPU goes up, your valuation goes up. Similarly, ARPU at Ffreedom is ARPP, average revenue per plan. So your average revenue per plan consists of the fifth one which is upfront. It consists of at least 10 plus products which we are able to advise them over a period of time. We just realized 6 months ago that some of our clients are sitting on very costly housing loans. We can help them swap to a lower cost and we get paid 50 basis points. You're sitting on a 12.5% loan. As a financial plan, it is my duty to reduce that loan from 12.5 to 10.5%. Loan amount average is 30-40 lakh because that's what house is. You get paid 50 basis points, 25 to 50 basis points. Additional revenue. So in our scheme of things, our average ARPP is close to 31,000 guys, and out of which only 20% comes from mutual fund. So it doesn't matter to us if the upfront goes. In fact, it doesn't matter if it comes back. It's okay. I'll give you direct one on the option. It's better that you lower than trust me. It's all about the why. Kanak talked about the why. And I'm not saying what we are doing is God's gift to mankind, everybody should follow it, blah, 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 all the time. I'm just trying to make a point, it's in your why. It's huge struggle for us also to get those clients which we are ready to, buy. We are approximately 1,000 odd families. We have army of financial planners which we are doing because we are getting the partnership mode. In fact, we did. Below this, we have created our own technology platform. We call it Advisor Factory.